Hi everybody, and welcome to this month's question time with SD Works. We're glad to have quite a panel of people here covering a variety of topics that are important to us as payroll and HR professionals. So I'll have them introduce and tell us a little bit about themselves as they go through. So I'm Simon Parsons, I'm the Director of UK Compliance for SD Works. My role is looking after government relationships and software compliance for our payroll solutions predominantly. We also have Kirsty Rogers of DWF Law. Do you want to tell us a little bit about yourself, Kirsty?
Thanks, Simon. Happy New Year to everybody. Nice to be back on the panel. I'm Kirsty Rogers, employment partner in the main at DWF, also managing partner of the Manchester office, and recently appointed group head of ESG, the G being governance and relevant to all compliance on pay as well as everything else. So yes, I'm in a bit of a flat panic about that at the moment, but looking forward to it and to this discussion.
Thank you, Kirsty, and you're welcome. You've been with us all the way along so far. We'll welcome a new face with us today, which is John Keeble of DWF Law as well. Tell us who you are, John, and why you've joined us today.
Oh, well, because I thankfully got an invite. Delighted to be here as a novice to all of this. I'm an employment partner in the DWF employment team based in the now COVID hotspot of Liverpool. Unfortunately, I haven't got the invite to manage a particular office of DWF or to the board, but you know, there's always time.
He's a brainy one.
Thank you, John. And you're our off-payroll worker expert, is that right?
Yes, that's right. Yes, famous last words, but yes.
Yeah, very good, although not everyone knows it as that. Lou Gray joins us again. It's great to have you back, Lou, from Ernst & Young. Or do you call yourselves that, or is it EY Absolute? Tell us a little bit about yourself and what you do. You're on mute at the minute. There you go.
Oh, sorry. That was the saying of 2020, and now I've introduced it into 2021. Happy New Year, everybody, and thanks, Simon. It's EY Absolute that I work in. I'm a senior manager, and I'm head of transitions on operations for the Managed Payroll Bureau service. I have 30 years experience working within government and within private business as well.
Sure, thank you, Lou. And then lastly, welcome Sam, who's a payroll legislation consultant at Armstrong Watson. That's a recent change. Lou, Sam are both part of Reward 300, I think, along with myself. So it's great to have you. Sam, tell us a little bit about what you do now.
Oh, thank you, Simon. Yes, happy New Year, everybody. I'm Samantha Mann. I've had a swift job change since we last met. I now work at Armstrong Watson LLP as it's actually payroll training consultant or payroll legislation training consultant. So I support the payroll team at Armstrong Watson, and I've been in the payroll world now for, well, it'll be 41 years, and it's fabulous actually to be back at the front line, albeit I'm living vicariously through the payroll team, but payroll bureau is my background, and it's nice to be back there.
Thank you, Sam, and it's good to welcome Andy Nichols back again. Andy and I have known each other for a long time, but tell us a little bit about yourself. And your background originally was payroll, but you're with the pension regulator now.
That's right, yeah. So background is all payroll, and then came to work for regulator about 6-7 years ago now, maybe, to help with automatic enrolment rollout to large employers and all the way through to everyone, really. With my payroll experience to help really payroll industry understand automatic enrolment. So that's my focus there, working part of the compliance enforcement team, but on the educate, enable, not the enforcement side. Yeah, it's really good to be here and see what happens in all the conversations we have. And I'll put in the pension bit, hopefully. So.
Yes, thank you. So we've got quite a strong team there. We've got employment law for our HR specialist here, and to help us a little bit with us our payroll professionals, as well as the transition as much more activity crosses from employment into payroll activity. and we've also got the pension side covered. So quite a panel of experts there. So we'll go on to the agenda, I think, Natalie, if that's all right. So today, let's see. Oh, we'll talk about housekeeping, shall we? I forgot about that. So if you have questions, there is a question panel within the capabilities. Just type it away. Natalie, who's steering things for us in the background, will pass them through to the panel so that we can see them. Some of them may actually come up in the conversation we have. So any questions, just feel free to ask. Polls, there are some polls, so we're interested to hear your opinions and thoughts of what you're interested in for the future. Today's session is recorded and will be available from the sdworks.co.uk events page for a download after, and we will send out a survey to you to see what you liked, what you didn't like, and what we can do better, and what you'd be interested in the future. It is very strange times at the moment, and maybe we'll hear why as we go through some of the various areas we're covering. Just a little disclaimer for you all, just so that we're aware. We are specialists in the fields that we deal with. It's an ever-moving field, but the presentation does not provide definitive answers to individual queries, and in some places takes a view on matters which may be uncertain, and in some places it is not intended to be relied upon, in any specific context or a substitute for seeking advice, legal or otherwise, on specific circumstances. Each case may actually be different. And I'm sure lots of us know that sometimes the question we're asked isn't actually the question at all. And so we have to sometimes be careful and think you need to seek appropriate advice. So today's discussion topics are, we're going to cover off payroll working first, IR35 deemed employment. We've had that on the agenda before, but it's tended to be towards the end as furlough has taken over the world. We're then going to go into national minimum wage, especially with the recent Bayes naming and shaming, holiday entitlements, COVID-19 latest. We will cover it because lockdown 2, 3, whatever we want to call it, 4 or 5, has meant that some of us that have come out of furlough or coronavirus job retention schemes have suddenly probably found us having to dive back in again. We'll look at some aspects of Brexit. It is sort of breaking news. And also we'll look at what's happening with payroll 2021 for April. And if you've got any idea, then you're probably better than me. I can imagine that Lou, Sam and I are just panicking, and you've got no idea on the pension front either, have you, Andy? But we'll come back to that. So we'll go to a temperature check, I think, Natalie, if that's all right. So let's do a temperature check. Do you want to do poll 1?
Yep, Simon, I'm just about to launch it there in the 1 sec.
Sure, thank you.
Tap on screens now. You should be able to see that. So we're just asking me, how's your business coping at the moment in lockdown 3.0? I'll let you talk through the answers, Simon.
Yeah, sure. So we're just seeing how you're feeling and coping at the moment. So the answers to select are: our business faced a real impact and we're struggling, that may still be going, or we're coping, although finding it tough, or we've seen minimal impact disruption, or we've not been impacted at all. It's just a temperature gauge just to see how you're doing in the world of change that we're facing at the moment. All right, okay. So actually, well, I'm going to say, Kirsty, actually, do you want to give us some thoughts on what you feel of the results? I'll throw you in there.
Encouraging to a degree, Simon, because there's a smaller number of people saying we're really, really struggling and face a real impact. And actually, my concern would be that there are many more, that there would have been more people in that bracket rather than the second one. I can't imagine that people aren't finding it really, really tough. So actually, even the large number that say they've had a minimal impact is positive as far as I'm concerned. But I suspect what we see is usually people making lots of redundancies, so really struggling. So that's positive for me in terms of the outcomes on that slide.
Yeah, I'm just wondering if it's slightly different than the headlines we might see, but then I guess they're potentially focused more in industry areas.
Yeah.
Okay, should we go to our first topic, Natalie, if that's all right? And I think we've probably got a poll relating to this one. I guess there's an element of whether we are, well, actually, let's ask it first, because so how prepared are you for IR35 change? Sometimes it's referred to as deemed employment or off payroll working. And so this is just seeing where you are. We're under 100 days to go. So we're prepared and ready. We've just started planning for it, or we're not prepared at all, but need to be, or actually we don't have any off payroll workers, or there may be members of the group there that's attending and listening that are just thinking to themselves, what on earth, Simon, are you talking about? Oh, in relation to IR35, I was going to say generally they might think that anyway. But
Thanks, Simon. I'm going to.
How are we doing?
We're still getting people sending in their votes, so let's just leave it open a few more seconds.
Sure, and I'm going to invite Lou, if you're happy to comment on the responses when they come in.
Okay, no problem.
And I don't know how it's impacting you at EY Absolute as well on preparations.
I think from my point of view, we have heard very little from our clients. So, I mean, looking at that, we're prepared and ready, 34%. That actually is quite good because I think having talked about IR35 for about the last 3 months, I'm always concerned that people aren't getting ready. And it's good to see then that people are confident with 28% that they don't have any off payroll workers. I think what I would reiterate is just how important it would be for businesses and teams to start planning ahead of the April deadline, because even in this the continued pandemic and everything that brings, I can't see the government extending that date for a further year, and that businesses will have to be ready so that the government can generate some more money.
Yes, thank you, Lou. So let's, to that end, let's start opening up the discussion. Well, our starting focus today is IR35, which is introduced for some private sector employers from April 2021, deferred from 2020. It's not just a payroll problem. So what is it and who is impacted? So if we go back to the main slide, Natalie, I think, John, can you start us and maybe a little bit of what is this IR35 and why should we be concerned and what do we do?
Yes, thank you, Simon. First of all, I'm slightly grateful that it wasn't 100%. We don't have any off-payroll workers, which may have made what I'm about to say slightly redundant. So there's a bonus there. But starting off with what is it? And with apologies for anyone out there who's an IR35 guru, but just by way of a gentle introduction, IR35 was introduced in 2000 as a tax avoidance measure. It's really directed at what is disguised employment. And generally, for both employment law and tax purposes, there has to be a direct relationship between an individual or the hirer or client to trigger employment. And pre-IR35, contractors sought to avoid that by providing their services through an intermediary, typically a personal services company. And IR35 sought to address this by ignoring the fact that a contractor was providing their services through a personal services company, which I'll abbreviate to a PSC, and ask the question, if the contractor was engaged directly by the hirer, would they be an employee? So IR35 therefore made the distinction between someone who is working like an employee and therefore inside IR35. If so, the PSC should broadly treat the payments received as employment income. On the other hand, if you had a contractor in business on their own account who was outside IR35, then that meant that there was a more favourable tax treatment that applied. However, and this is important in terms of the changes that are coming in, The responsibility for assessing whether a contractor fell inside or outside IR35 falls on the contractor. And it's fair to say that there has been pretty significant non-compliance with IR35 by contractors assessing which side of the line that they fall. And that's perhaps driven by a view that you'd have to be fairly unlucky to face an IR35 inquiry. Now, IR35 was intended to generate some pretty significant tax revenues, but in some of the years, it didn't manage to get to the level of 1% of the target that it had set itself. And due to that loss of revenue, it's perhaps inevitable that at some point something was going to change. And changes were introduced firstly for the public sector, which are now being rolled out to the private sector in April 2021. And I think probably the most significant change is going to be that it's the client, i.e. you, who are engaging the contractor, who will have responsibility for assessing whether IR35 applies. And to a degree, it's quite a clever move by HMRC, because to a degree, it's transferred IR35 compliance from it to you. So that's a sort of broad overview of what is IR35. I think moving on to the next question is, who does it impact? And the answer to that is potentially all parties in the contractual chain. And there are some new key definitions, particularly the definition of client and fee payer. Now, the client is the organisation at the top of the contractual chain who receives the services. And it's the client who has to make the decision whether IR35 applies or not, i.e. is it inside or outside IR35. Now, the fee payer is the organisation one step above the intermediary in the contractual chain. And it has to operate PAYE if the client decision is that the engagement is inside IR35. And perhaps to bring it to life to a degree by way of an example, let's say that John Smith is providing his services through his personal service company, John Smith Limited, to you. If you assess the engagement as being inside IR35, then as you're one step above the intermediary, the personal services company in the contractual chain, you'd also be responsible for making deductions from payments made to John Smith Limited if your assessment is that the assignment is inside IR35. Now, if there are additional parties in the contractual chain, often an agency or an umbrella company, you'd be one step removed from that. So you would remain the client, but because there's another party interposed in the contractual chain between you and the personal services company, they would be the fee payer and have the responsibility for making deductions from payments made to John Smith Limited if the assessment is that it's inside IR35. Now, having said that, the new rules don't apply in all circumstances. They only apply to medium or large entities, and therefore a company which is small is excluded from this. And a company is small if it satisfies two or more of the following requirements. The first is having an annual turnover of not more than 10.2 million. The second is having a balance sheet total of not more than 5.1 million. And the third is having not more than 50 employees. Now, there are also other circumstances where IR35 wouldn't bite. And the first is where the agency legislation applies. So if there is an agency in the contractual chain which is already deducting tax on an employed basis from those supplied, IR35 wouldn't bite. It also potentially wouldn't bite where you fully outsource a service. Now, if you fully outsource a service to a third party, and there is a contractor who's providing their services to the outsourced provider, it could be the outsourced service provider who would be the client for the purposes of making the IR35 assessment rather than you. There's also a requirement for the intermediary to be a relevant intermediary, which in most typical circumstances is where the contractor owns more than 5% of the ordinary share capital in their personal services company. When does it start? Well, I think Simon's covered that in terms of April 2021. But moving on to determinations and disagreements. Well, as we said, as the client, you have the obligation to make the assessment as to whether an engagement falls within IR35 or outside IR35. Once you've made that engagement, you have to issue what is known as a status determination statement, which is really your outcome of whether it's inside or outside IR35. And you've got to give your reasons for doing so. In terms of carrying out an assessment, it isn't prescribed the way in which you do it. And it's fair to say we're seeing a mixed bag as to how people are dealing with it. Some people are using CEST, the Check Employment Status for Tax tool, and that lists a number of questions which you answer, and at the end it hopefully gives you a determination as to whether an engagement is inside or outside IR35. And the type of questions that the CEST tool asks are really directed at employment status indicators, the usual matters such as whether there's control, supervision, personal service, integration, financial risk, and a host of other matters. Now, you do need to provide the status determination statement not only to the worker, but also the entity with which you contract. And it's essential that you do this because if you don't, you'll be treated as the fee payer and be responsible for making deductions from payments made. So really, it's a hot potato that you want to get out of your hands onto someone else's as quickly as you possibly can. Now, for existing contracts, you'll need to issue the status determination statement before the first payment under the contract on or after 6 April 2021. In terms of disagreements, then a worker or a fee payer can challenge a status determination statement, but of course they're only likely to do so if the assessment is inside IR35. And there's a 45-day period to respond and either confirm or reverse your decision. And again, it's essential that you stick to these time limits, because if you don't respond within the time frame, then you can become the fee payer and be responsible for making the deductions. Now, in terms of implications for HR, I suppose the initial point is if you haven't started making preparations, now's the time to do it, because time is ticking. But I think as part of an overarching view, you need to decide what your approach to IR35 is going to be, because it's quite well publicised, certainly in 2020 and leading up to when IR35 was going to be introduced before it was delayed, that there were a number of organisations, particularly banks and financial institutions, that were just taking a blanket view that they were not going to put up with personal services companies in the supply chain. So the first thing to do is work out your approach. Are you going to decide that you will assess contractors as being outside or inside IR35, or just not have them in the supply chain? What's going to be your alternative model? Are you going to engage workers as direct employees or have them supplied by an employment agency? Or alternatively, are contractors going to become employees of umbrella companies? So that's a decision I think that has to be made. Your approach to IR35 will pivot from that. But in terms of steps to consider, if you're not so advanced in it, in terms of takeaways, I think the first thing to do is identify contractors who need to be assessed under IR35 and review those contracts, but more importantly as well, the actual working practices and conditions. Because frankly, it's not very difficult to draft a contract which reflects outside IR35 status. However, it's vital that the contract reflects the actual working practices, because if it doesn't, that creates a degree of risk. And secondly, going from that, you need to consider in the way in which you contract with those contractors, whether there are employment status risks, for example, around control, supervision, substitution, and the such like. I think it's helpful to identify if there are any business areas or projects where the IR35 risk is heightened. For example, do you use contractors mainly for bespoke projects, or are there elements of continued ongoing contract work in certain areas of the business? And have you looked at how long your contractors have been with you? If you've had a contractor who's been working with you for 9 years, obviously that creates a degree of risk that if you've got someone from a bespoke project isn't the same degree of risk. It's helpful, I think, to examine the labour supply chain, direct and indirect engagement via agencies, for example, to understand who pays the workers, how they're paid, and whether you have a policy in respect of agencies. I think it's also helpful to identify any key contractors that you have that you're unwilling to lose as a resource, and whether there are engagements that you've got that should be prioritised as key relationships. In terms of practical steps, you need to determine where the responsibility is going to rest in the business for making and issuing status determination statements, and of course managing any disagreement process, plus ongoing monitoring to ensure that the working practices do reflect the contractual terms. Probably helpful to draft some form of disagreement process for contractors to follow whether they disagree with a status determination statement. And also one thing that's often overlooked, which I think is a helpful thing to have, is clear contractual policy documents and processes, potentially a contractor policy, so that what you can do is aim to demark the contractor population in as clear a way as possible from the employed population. Of course, as always, ongoing record keeping and data capture obligations are important to focus on. And just as a final point, it'd be helpful for key management and personnel to have training on IR35 compliance obligations. So I think those are probably my key takeaways from an HR perspective, Simon.
Well, thank you, John. That's really appreciated. Lou, any initial thoughts there? It sounds so simple.
It does sound so simple, and then you realise that it has so many people involved. It's not just payroll. You're looking at the finance team, you're looking at an HR team and a payroll team all coming together. You know, so even listening to John share all that knowledge, I mean, businesses have to realise this does have an impact on them. It isn't going to go away, and there is a good bit of work involved. It isn't something that you can do in a day and hope for the best. You do have to have your records. I think in relation to the determination tool on the HMRC website, I think what I found personally, just to highlight it, is that no matter what I put in there, it was always going back to this is a deemed employee, and it was taking that information to see what you could understand better and to be able to feed that back to the individual who you knew that wasn't necessarily going to be happy with what your status had, what their status had been deemed as, and it's having the processes and protocols in place to be able to deal with that next step as well.
Well, and I'm thinking, taking your comment there, Lou, and I've seen, John, that some of the determinations, they're not you're in, you're out. Some of them are, actually, I don't know. And they're probably the tricky ones, because the CEST tool does sometimes give you a, I can't determine.
Yes, well, I have to say, with previous iterations of CEST, I've spent many futile hours trying to process map it to work out what inputs will result in particular outputs, with not total success, I have to say. But at the more recent iterations of CEST are actually better and tend to produce less indeterminate outcomes than previous ones. I'm sure we've all been there when we've done it before in previous iterations. The majority of them, they just can't come to a conclusion.
Yes. Sam, any thoughts there? I think you're implying, John, there, but I'll ask Sam to make some comments that potentially if we bury our head in the sand, if it's found that they do fall under off-payroll working, the engager then becomes liable.
Yes.
Yeah.
Yes, and that again is you say it's quite a clever move from HMRC, isn't it? It's just transferring the risk and potential liabilities onto the client.
Yeah. Is that the PSC off the hook if they keep quiet?
Well, the PSC. Yes, I think in the main, because the obligations to assess, provide the status determination statement and the such like rest really with the client. That's the starting point.
Sure. Have you got any thoughts, Sam? Want to share with
Yeah,
us?
I mean, yeah, I was going to say, picking up actually just on that final point that John's just made. This obviously, these new reforms impact medium and large size employers, not small employers. And when the reforms were first sort of being mooted in terms of the detail, it was clear that there was a real political drive to keep the small engager outside of the legislation completely. And the biggest challenge that this led for contractors and for agencies was knowing when they would be responsible for operating. So, for example, that PSC, they still have obligations under IR35 where they're not working for a medium or a larger engager or a public sector body. But the important thing is to know when. And there was no requirement on the smaller engager to say, oh, I'm small. But what has come about in the last 12 months is the requirement that where the request is made by the contractor or by the agency, as to the size, are you small? Are you captured by these off-payroll working reforms? Then the engager does have an obligation now to let the worker out or the agency know, so that they're not just sat around thinking, oh well, my engager is going to deal with this, and the fee payer will process any amounts that are captured or deemed employment. From a payroll perspective, what do we need to think about? So we're thinking about income tax, national insurance, and apprenticeship levy. That's it. This is a tax reform, and when you consider employment status, yes, it's a deemed employment status, but it isn't an actual employment status because there is that intermediary sat in between the individual and the engager. And so statutory payments, student loans, pensions, which I know Andy's going to talk about, all of those sit outside of the normal payroll processes. Now, what we've seen in the last 12 months come in is a flag within payroll software. Unfortunately, the public sector bodies didn't have the benefit of this flag to begin with. So HMRC systems didn't know when an off-payroll worker was being processed. So they would issue a student loan start notification when a new starter came on board and where that was identified. But a flag now sits within payroll to ensure that when that individual gets submitted on an FPS, that the HMRC don't issue the start notices for student loans in the same way that they did, the same way as they were doing.
Well,
And I
thank you,
think
Sam.
something
That's
just
really great.
pick up there.
Yeah,
Sorry, Simon.
sure.
I think it's important that as a payroller that you feel that you can reach out to your software providers and ask them, are they prepared for April? Do they have this flag for to allow employers to be able to tick in preparation for the IR35? And not to be afraid of asking that question, because sometimes when you look at the last year and the legislation and the software updates that we've had, it's always important to keep up to date, and that and have the reliance and security of knowing that your software provider is on top of everything for you.
Yeah, sure. It's really important. Now, one aspect is we hear them referred to as deemed employees, and I think you've mentioned, Sam, and that there's something different. But I'm thinking, Kirsty, don't they have employment rights then from the engager? Or John?
Well, shall I pick that up?
Sure.
In terms of IR35, it's absolutely right. It's a deemed employment for tax purposes rather than conferring employment rights. Normally, you would say that it would be the PSC that would be responsible for matters such as SSP and the such like. what we have seen since fairly recently is that there are individuals who are seeking to assert that they have some form of employment rights, because tax is fairly binary in the sense of there's employed and there's self-employed. Employment law is a little bit more nuanced because you have an intermediate category of worker, which is someone who is not an employee, operates on a self-employed basis, but they look more like an employee. So trying to determine whether someone is a worker or an employee is a fairly vexed question. But certainly within the public sector, what we saw was a number of individuals who supplied their services on an outside IR35 basis. Then when the public sector determined that they were inside IR35, they would argue till they were blue in the face that they weren't. But when the public sector body said, well, in actual fact, you are inside IR35, they then said, well, in that case, I must be a worker, and therefore I want 6 years holiday pay. So you get these challenges, but I think that the starting position really is that it's a deemed employment status rather than a true employment status under employment law.
Okay, so I'm thinking generally they're not an employee of the engaging company, but they are an employee of their own personal service company or umbrella, right?
Yes.
So the rights would come from their own business, not the person they didn't work for.
Yes.
Okay.
Yes.
And does that I think it's probably played into the furlough argument that's gone on about these people saying they've been missed, whereas in reality they haven't actually paid themselves anything. Is that fair or not?
Well, yes, I think that's probably fair.
Right, okay. Now, Andy, these deemed employees, is there a pension implication? Because, of course, we have a responsibility to auto-enroll all workers.
That's right. And as John kindly pointed out, workers is an independent thing to employees as well. So if someone's a worker, a personal service worker, they do come under automatic enrolment. So you should be looking at them to determine if they need to be automatically enrolled, or are they generally self-employed. But obviously this is aimed at probably the personal service company, the limited company. So if it's gone through all that process and you've identified them as purely needing to be taxed national insurance because they are this deemed employee and not a worker from the point of view of what work originally said about automatic enrollment picking up workers, then as a limited company, it's a company. It's not a worker. From our perspective, they're excluded from pension. So as Sam was saying, tax national insurance, apprenticeship levy, whatever, but not pensions. But as part of that assessment process, the employer or the client or whoever it might be needs to consider, are they truly a worker? Because if they are, they will come under automatic enrolment. So they should build it all in. But as you said, the limited, if it is a limited company and it is gone through all the tools and everything you've assessed, and it is just going to be this deemed employment IR35 type thing, then chances are they're not going to be covered for pension from the client's point of view, but from that individual's company perspective, then there is obviously a duty on them to do automatic enrolment. But if it's just a single director only company, that's the only person there, or the other directors are all not employed by that that limited company, then they are excluded from automatic enrolment. But as soon as you've got at least one or more employed directors with an employee, so if you've got two employed directors or you've got an employee and employed directors, then automatic enrolment will kick in. So if you think you've got that situation, then by all means ring the helpline or look at detail guide number 1 on TPR website and the document library. Top right hand side is a little icon document library. Automatic enrolment detail guide number 1 talks all about the joys of personal service workers, etc. So have a read or ring the helpline, get some advice. So yes.
So I'm thinking there, Andy, if they're in an umbrella type organisation, there'll be lots. So they would fall under pension auto enrolment responsibilities, or not?
I think you'll find if umbrella companies do put their workers, their limited company employee into a pension scheme. Yeah.
Sure. Okay, well, thanks very much. So I think we've got a distinction here between a deemed employee and an employee. So I think they're a deemed employee of the engager and an employee or a director of their own business. So the responsibilities therefore change. They're not a deemed employee in their own business. They're either a director or employee. I think that's how it's explaining. And I guess that then leads into other aspects. And Sam, I don't know if you can help us out here in relation to, well, I've already paid the tax and national insurance and
Yep.
I'm expecting a baby. What do I do? Can you help us out there?
Yeah, you account for that. Now there's a RTI data items list, and it's field 58A.
All right,
Check me.
yes.
58A, right. Now, obviously,
Yes.
your average payroll software isn't going to say field 58A, but there will be a field that will be used where the payment has already been subject to tax, and then IC, and so any wage payment that is being made to the individual through their PSC needs to be accounted for using that field. So whichever field that will be within the software that you use, and every software I'm sure will be slightly different as to how it uses it. And then that means that no tax or national insurance is going to be accounted for with that, but it shows that a payment has been made. Now, obviously, because you've got an actual employment situation there, then you might be in a situation where you want to claim a statutory payment, such as statutory maternity pay. And so it's the payments that you're being made through your PSC that will be accounted for when you're calculating the relevant pay for your statutory payments, not the payments that were made to the intermediary through the engager or through the fee payer.
So I think the HMRC are being a bit clever here, aren't they? So they're actually trying to attempt to get the contractor, if I call them that, to declare what their income is. And if they don't declare it, it isn't income for statutory payment purposes. Or furlough, I'd suggest, if that was a consideration. They're kind of saying, well, what have you actually paid yourself? If you have, even though it's been taxed and NI'd, if you declare it as already been paid tax and NI'd under field 58A, then you will get the benefit of the average earnings for S&P. Is that right? Yeah.
Yes, I think that's right.
Great.
You spoke really fast there, Simon, but I think that's basically what you're saying. But I mean,
Yes.
John might have a view on this, but I would argue that under IR35, this has always been the case. That obviously
Yes.
the significant difference, because it's always been, the responsibility has always been on the PSC or on the intermediary to assess those contracts to see whether or not they're captured by IR35 and whether or not they're deemed employment. So those rules have always existed. I suppose, you know, the elephant in the room is the fact that the director has total control over what they pay themselves and, more importantly, how they pay themselves, whether they pay themselves a wage or a salary, which is just enough to be accounted for national insurance purposes, and then the rest in dividends or whatever, but they have that control, which a normal employee wouldn't have. I mean, I don't know, John probably has some views on that, and also Lou probably.
Yeah, well, I think we may cover some of those things off in additional material, and maybe we'll carry on to next question time a bit as well. There is one question I've seen, which I think we'll deal with very quickly, was whose responsibility is it to do this CEST test?
Well, that's the client's responsibility.
Okay, so the engager.
Yes, the engager.
Yes, all right. Thank you. We're going to move on to the topic of national minimum wage. So I think we'll go with another poll if that's all right. And I think we've had some questions I've seen flying through on national minimum wage as well. So
Simon, I was going to say, Simon, before we move on from IR35, there is a question in the being posed by
go for
in
it.
the chat box, which has taught if someone, great question by the way, thank you, if someone has been determined as a deemed employee, can we process the VAT as a non-taxable element on their pay and tax the deemed amount as required?
Yes, shall I answer that one? The answer is yes. So there will be an element of in your payroll operation, you'll have amounts that are subject to tax and NI and other amounts which are not. So you can pay the amounts of settlement of the invoice, such as VAT and expenses for the job. So if they've had to provide equipment or materials, you can actually pay for those tax and NI free. But it's only the fee element of the invoice for them doing the work that you actually put through as taxable. But you do need to put through the other amounts as well as non-taxable, non-NIable, so that they're all being declared in the appropriate way. So thanks for that, Sam. Let's go.
Yeah, I was going to say this picks up on what Lou said earlier about understanding your software, making sure that your software has been updated to take account of this. You know, so at this time of the year, it's always important to make sure you're signed up for some more training with your software developer.
That's right. And I think there's an element of, if you went to them and said, oh, I want to put the VAT through, how do I do that? It may be an element of, well, you have to add an element to your payroll, which is non-taxable and non-reliable. Whereas if you're saying, how do I indicate a worker as being an off-payroll worker, it's an element of, we'll put yes in the box. So there is two aspects here, one of identifying and the other of actually making the payment, which then might go in and impact your GLs and how you're going to allocate costs and your national insurance implication. Employment allowance can't be offset against off-payroll workers, national insurance, secondary liabilities. There's all those sorts of implications that come into play. Something we're going to publish a guide on our website, and we can cover more as we get closer to April on more of the details on the payroll side. Let's go to the next poll, Natalie, on national minimum wage. So we're asking what areas are a problem for minimum pay risk as you think as applicable to your own business. And so is it work time recording or what's termed as deductions for the benefit of an employer, or the complexity of the law is just too wild for anybody to understand what it is, or salary sacrifice and flexible benefit complexities. I think we've already had a question that I've seen pop up about potential salary sacrifice implications and pensions, so maybe we'll discuss that briefly, Andy, in a minute or two. So how are we feeling on national minimum wage? Maybe we'll say that the Department for Business, Enterprise and Industrial Strategy has recently named 139 rogue employers for failing to be meeting national minimum wage requirements. What are employers failing to do, and are they as innocent as some may claim, is the question associated with that. Any thoughts initially there? I'm going to ask you, Kirsty, have you got a view here?
Well, in terms of, well, I think working time is a big issue, and I can see that many other people think that they don't capture the time spent, for example, changing into work clothing where people have uniforms, or time spent training, and it's the bits around the edges. If people are very absolute about the hours that they work and then they do anything around the edges, that tends to mean they get caught out in relation to national minimum wage. It's just things that people haven't even thought count.
Yes. All right. Well, thank you. Lou, any thoughts? What's going wrong?
I think very often, as has already been said, it's the extra things that people don't necessarily pay attention to or consider. You know, what the business minister had said is that what eats into a person's pay packet is paying for uniforms, any training that they have to pay for, parking fees. You know, some employers fail to raise an employee's pay after a birthday, and just by simply missing somebody's birthday, that could mean that their pay drops below the national minimum wage. You know, what we're looking at is also looking at volunteers and interns and looking at their payments that are being made to them and under what sort of contract. And you've also got to look at the deductions being made. And I think that's something that people don't necessarily take into account. You know, if my husband goes into work, he goes in usually half an hour to 45 minutes early to open up the building for the rest of the team coming in. That very often, well, it isn't included in his time. That is what employers almost expect that an employee would do. That's outside, that's just an extra that they do. And very often we're not taking that into account. If somebody would go and buy a pair of shoes for work, and then we're getting that reimbursed, you still have to look at that person's pay, at that person's week, and what they've lost, and has that been dropping them below the national minimum wage. And it's all those wee things that are important that actually people have to realise this has an impact on the government legislation and as an employer what you're working at.
Are these employers rogues that we see listed? There's quite some big names on the list this time.
Don't necessarily think that they're I'm not saying that they're not rogues. Okay, so I'm not saying that they're not rogues. But what I am saying is that you could be a rogue by mistake. You know, very much we're working in a world now where it's a blame. There's somebody to blame. Somebody has to take responsibility. And gone are the days where you actually make an honest mistake. For some of the bigger businesses on the rogue list, you have to ask, are their practices up to scratch? And in, you know, do they match what the government actually are asking for? And the answer would be, looking at some of the names on the list, well, no, you don't seem to have good practices. There's not a good review of your work. You're not constantly looking at the work and the payments that you're making. And really, it is up to the employer to have that responsibility. And it's not like you can not reach out to somebody and ask for that help. It is there. But again, that comes down to maybe paying for that advice or paying for somebody in your team to be knowledgeable.
One of the other things that's happening is the transfer of businesses. You know, businesses being acquired, and within the business being acquired, which may even be insolvent. There's a lot of that around. There has been a national minimum wage problem, leaving the new and more reputable and probably less rogue employer responsible and named and shamed in circumstances where actually it isn't their fault, and that's increasingly something that's coming up on M&A deals and questionnaires in due diligence.
Sure. So let me pick up on that a little bit, Kirsty. So you're saying company that's been struggling a bit and I've taken them over. Of course, my responsibilities start from the top point of takeover, and you're saying that's not the case.
No, the responsibility is there from the point of takeover, but the actual declaration may relate to the period before. So
I would inherit.
An audit will come in and you inherit that. So then you're named. So that's,
how many years back does that go?
I don't know. I've just seen it come up on a couple of occasions with fairly big clients, but
yeah, sure. Sam, I think it might be 6. Sam, have you got any thoughts on?
Yeah, I think as a standard you'd be looking at 6, wouldn't you? Obviously, HMRC can go back further if they suspect, you know, there's fraudulent activity going on, true rogue activity. I think what's I've got mixed views about the timing of when this naming list was published, i.e. just before New Year. I know we all had quiet Christmases this year, but you know, it wasn't that quiet that we would want to publish this. So it was published kind of during a quiet time for most people work-wise, but also that they led with that rogue title. So all employers on that list were tarred with the same brush, whether or not it was fair or not. And it's interesting, but what was interesting was, of course, for the first time, Bayes actually published a slightly more detailed, slightly more comprehensive guide as to what had gone wrong during the years of 2016 and 2018, which is the years that these employers were found to be non-compliant. And it's interesting because when you look at the problems that, this has been lobbied for. It was the Director of Labour Market Enforcement put his strength behind this happening. And this publication, I mean, I used to quote the pension regulators quarterly compliance as being the kind of the bastion of all that is good in explaining what's gone wrong, so that we can learn from other people's mistakes. Learn from your own, of course, but it's better if you can learn from someone else's. And what's interesting is that the items in this compliance list, which is the first of what we hope will be many, pretty much mirrors the list that was published in the employer bulletin back in December 2018. So not a lot. I mean, I appreciate that we're looking at the same periods, but it'll be interesting to see what the next one actually says, whether or not lessons are being learned and the message is getting out there. That employers do need to be aware that it isn't just a top line of what you actually pay per hour worked, but there is a lot more to it. But it was nice to see that publication. Granted, it's only 6 pages, but it was good to see. That was encouraging.
Sure. Now, we had a question pop up, Andy,
We did.
on smart pensions. I don't know if you want to give a view there, or if you want a bit more detail.
On smart as in not the pension provider, but smart as in salary sacrifice.
Salary sacrifice. Yeah.
Sorry, can't give a view on smart pensions as a
There's
provider.
one called it, but no, salary sacrifice arrangement.
Yeah. Yeah, that's right. I mean, obviously, you can't have salary sacrifice arrangements in place which would take someone below the national minimum wage. But I guess the thing is, with all this, it is really messy, isn't it, and complex, I think, how the actual national minimum wage calculations take place. And of course, the backdating could be easily before someone's even staging date or due to start date for automatic enrolment. And from a regulator perspective, our view is fairly simple. It's true for all errors, in fact, and that is, when was that money payable? So if someone should have had an extra £10 in their week's pay 2-3 years ago, and that's the only change, that's the only thing that's gone wrong with that individual for national minimum wage purposes. But that £10 2 years ago, if it had been paid at that time when it should have been paid, would have made them over the limit for being automatically enrolled. Then they should have been automatically enrolled 2 years ago. And then contributions would be due from that 2 years ago date based on the pay that they've received since then, and calculated and contributions deducted. Or if TPI get involved, chances are we would require the employer to pay the employee contribution. And the individual should get a letter to say, well done, you've been enrolled 2 years ago into the scheme, you have the right to opt out, etc. So actually, national minimum wage is so important to get it to not fall foul of it, really. So you should take the time to investigate it as payroll people in conjunction with HR, etc. Because the implications are significant. And if my memory is right, if it's wrong, you get fined. You don't have any leeway, you just get a penalty, I think, but I could be wrong now, that may have changed.
I think that's changed for genuine salary sacrifice breaches. They allow you to, in effect, catch up. But for the group that we've had listed, they all did pay a penalty. So they've all committed criminal acts, if I call it that. I'll pay criminal acts. So they're all considered criminals, hence they're rogue. Where they made a salary sacrifice blip, I think there's now an opportunity to just top up and they don't fine them. Is that right, Sam? Am I making that up?
Sorry, what was that?
For salary sacrifice breaches on national minimum wage, I think they'll just allow you the opportunity to correct the mistake without penalty. Was that something
yes,
that came
but
in?
only it's in very limited circumstances, which off the top of my head I've forgotten what they are, but they are very strange. There are very limited circumstances to which that would apply. The underpayment still would need to be paid. It just might free the employer up from the penalties, which can be, as you know, up to 200% of the underpayment. I mean, what was interesting about this question that was asked is there a safe pay protection limit in regards to pension salary exchange? So I'm assuming from that what they're saying is if somebody's on £200,000 a year, for example, and they sacrifice £100,000, would that be safe from a national minimum wage perspective. I think that's what the question is asking, and I think this goes into what Andy's already touched on, but and what has already been touched on is it isn't just an amount per hour. It's you're looking at all the whole reward package. But we do know that each year, this time of the year, payroll bureaus will be and employers and payroll teams will be working out which employees have to come out of the salary sacrifice schemes because of the increases. And we'll see this with the national living wage going down to 23-year-olds from April. There'll be employees are having to work out who has to come out of their salary sacrifice schemes.
That's right, certainly with the changing limits. I think there was a question for you, Andy. I might tackle it. So it says, Andy, does paying employee contributions in backdated case, is this a taxable benefit in kind? I actually suggesting to you, Andy, that's now an employer contribution. So it doesn't actually have tax implications at all.
That's right.
True?
Yeah, that's right.
Yes.
What we're saying is it's an employer making all the payment. So there's no employee contribution at all. It's just that the amount the employee would have contributed becomes an employer contribution in addition to the normal employer contribution. I think if the salary sacrifice is in place, you should make sure the scheme rules do enable an employee contribution, because some scheme rules might say it's an employer only contribution scheme, in which case, if salary sacrifice can't be taken because the individual go below minimum wage, which isn't allowed, therefore all the contribution becomes an employer contribution. So you should check the pension scheme rules allow normal contributions as well as salary sacrifice is dependent. Salary sacrifice is an agreement between the individual and the employer, contractual. Meanwhile, the scheme rules determine what contributions deducted. So you need to check.
And I think there's a question come in, which I think something that maybe we tackle at some of the NMW events, Sam. I'm not sure if you're there now, but if you were, or whoever is on the fact that salary sacrifice amounts of other amounts end up so often reducing the NMW pay when they've not actually linked to that at all. But we'll go. It's a really complex area. There are some guides and etc. published on our resource page against national minimum wage as well, and watch out because it's a real risk area for employers, and we're waiting for the 2018 to 2020 list to be published, which might reveal some issues and challenges as well. It is a complex area. I think, as you hinted, Sam, it's not about the pay rate per hour, not about their hourly rate at all. National minimum wage is about what they receive divided by the actual hours they've worked, which may be totally different to their hourly pay rate. And it's whether the breach is there, which is different to the real living wage or the London living wage or the living wage, which are more about you receive an hourly rate. Minimum pay isn't. It's about what have you got at the end of the day. We'll move on now to our next topic, which I think is holiday. And this is quite a hot one that's going around as well at the moment, and there's going to be quite a lot of disagreement. Did we have a poll for this one, Sam? I think, sorry, Natalie, I think we did.
Yep, I'm just going to pull the poll up now, Simon. Just bear with me 1 second. Okay, it's now going to be on screens for people to vote.
So do you see current holiday scheme rules as a potential breach risk? The breach it's talking about is whether it meets the Working Time Directive requirements, Employment Rights Act. So do you consider that your current scheme is low risk, you have it all sorted, or there's medium risk, you need to actually bring things up to date, or you've got a high risk, you've got a real thorough review to be undertaken on your holiday pay practices and schemes? Holiday pay is boundaried by some legal minimums under what we know as Regulation 13, 13A, 16, etc., and the Employment Rights Act on what it is. And then we have these different types of workers. So I think there's been a lot of confusion over holiday entitlements and holiday pay. I think we're asking the question once we've got these results, so maybe you can comment on it as well, Lou. is comment on the results we've seen and what is the latest position and where are difficulties being experienced from your view?
I think
Did we
one
see
of
the
the,
results then, Natalie? Sorry.
you okay?
Yeah, thanks.
So there, what we've seen is that it's viewed as a low risk and having it sorted, which is very reassuring at 52%. Even the medium risk with a few things need to be resolved at 41%. That's all very positive and it's all good news. I suppose in reality, sometimes
Yes.
in the payroll bureau business where I work, things aren't necessarily straightforward. And even really in the government positions I've worked, again, clarity was still required. I mean, what we're looking at is the UK minimum statutory requirement for paid holiday is 28 days or 5.6 weeks, and that has to be prorated for part-time workers. But then we've also got to consider then the Good Work Plan with the Taylor Review, and in April 20, we included doing calculations of holidays being introduced from 12 weeks to 52 weeks. Do every client that I know do it on that ground? Not necessarily. It very much takes company policy and what they want, and also the clarity that's needed for that period. The UK's definition of a week's pay is very technical, as I'm sure that you'll all realise and appreciate, and it's very focused on the basic pay. But can that be clear for somebody who is monthly paid? And that can be very frustrating. And it's also then you look at the calculations, what seems to be very simple and straightforward whenever you then start looking at somebody's pay, and the fact that it needs to include commission payments and regular overtime. Even just a simple question, what is regular overtime? There's so many factors to be taken into consideration, in my experience.
Okay, thank you, Lou. John, is this one of your special areas?
What, holiday pay?
Yes.
Well, yeah, one of my many specialities. Certainly now. Do you want to comment on that in terms of potential issues around holiday pay?
Yes.
I think for some employees, the calculation of holiday clearly isn't that difficult. But the more you move away from standard working hours with a set salary, the more intricacies and difficulties arise. And often where we see the most issues that there are with more atypical patterns of working. And often the basis on which people calculate holiday is on the 12.07%. And whilst that's often quite a good rule of thumb for certain categories of workers, it's not a panacea. And part of the problems can arise, for example, if you have people who are working on term time basis and their holidays are assessed on the periods when they're actually working. But of course, holiday accrues as a facet of employment rather than working. And sometimes you can get some quite wide divergences. So yes. I think the more atypical the working relationship is, the more scope there is for holiday pay to be miscalculated, often completely inadvertently.
Yeah, Sam, any thoughts? You've met with the policy people at Bayes, as I have, and I think there's a lot of confusion. So it's quite heartening to see the statistical there. My experience is actually it's more confused.
Yeah, I think it's not a straightforward subject, and I think when you sit a lot of people around the table and start to discuss all the elements, so the regulations, the case law, and I think it's case law particularly that really throws a kind of a bombshell into the whole subject of holiday pay. When you look at the fact, and as you mentioned many times, the fact that the 52 weeks doesn't really equate to monthly, and when you look at the guidance that kind of talks to you about how to calculate if you're on a monthly pay reference period, it does become hugely complicated. What concerns me, I think, in the long term is the fact that as we move towards a single enforcement body, which at the moment will have HMRC's national minimum wage teams, as well as the agency and the gangmasters authority. One of the things that was raised in the consultation last year was the fact that going forward, the single enforcement body would support state enforcement of holiday pay for vulnerable workers. Now, that consultation paper didn't talk about what a vulnerable worker would look like, so how that would be defined, I don't know, but we could, if we're not careful, end up in a situation where we're in now with national minimum wage, with employers being named as rogue employers, simply because they're still, to a lesser or larger degree, working from historical practices that haven't maybe kept pace with the change in legislation and the change in case law. And I think that's the concern that I have on the subject of holiday pay. Historically, contract was king when it came to working out holiday pay, and then of course the working time regulations came in and that all changed, and everybody focused on the regulations to begin with, but then maybe haven't always kept pace with the change since then. And I think it's one of those subjects like the national minimum wage that at first thought you think, this is a straightforward subject, we're okay, but actually when you kind of drill down, you know, it would benefit from a little closer exploration, particularly if we do get to a point where we have state enforcement. At the moment, the employee is responsible for enforcing their entitlement and making a claim through the tribunals. But if state get involved, either through the single enforcement body or some other body, then, as I say, we're going to be in a situation where we are with national minimum wage, which isn't a situation.
Yes. Because I guess at the moment the worry is if someone complains, then you have to settle with that individual if they're right. With the enforcer, if someone complains and their pay is okay, they're actually okay, they'll look at everyone else. And that's a risk you don't really have at the moment. But with a single enforcer, the enforcer will look at everyone. And we get that with national minimum wage. So quite often the national minimum wage complainant actually hasn't breached national minimum wage, but they'll pick up everyone that has. Did you want to make a comment there, Kirsty?
Yeah, just to say there are more wider ranging holiday pay complaints going on. I'm certainly dealing with collective holiday pay grievances brought through unions at the moment, which could result in quite big tribunal claims. But it's still unclear what's included in terms of normal pay for the purposes of calculating holiday pay, and it looks like that's going to change again. Even through government, because of the, I don't know if anybody saw the article in the FT yesterday suggesting that voluntary overtime was not going to be included in the future, whereas the case law said it's going to be included. So it's not been steady for anything more than a couple of months at a time for about the last 3 years. So it's very difficult to work out what is the true position. And as Sam says, if you've got an enforcement body trying to enforce something that nobody's clear about, you are going to get people on that list who have tried their best with what is an exceptionally difficult set of rules, although on the face of it, it seems easy.
Yes. It's strange, isn't it? And I'm thinking, and I think we've had the new minister, because it's changed recently, denying everything on Twitter today, but the FT is fairly reasonable source.
And to be fair, it's
times.
What is being anticipated. If you asked a group of employment lawyers what they thought might change as a result of Brexit, that is one of the things that we would have pointed to. So it's not beyond the realms of possibility that that is in the minds, but we don't know. Who knows?
Yeah. Very good. I'm still seeing an element of rolled up going on. Now we're going to go into furlough and lockdown, and I guess a lot of us thought we're coming to the end of this. It's all finishing. We're all back to normal, and then a few days before Christmas or after, we're all sent and told to stay at home. So I guess it's job retention scheme, the latest. So with the latest lockdown requirements, and us all being told to stay at home, what does that mean for employment and what is the latest? I think I've got Kirsty, I think I had you start.
Yeah, you did.
What
Well,
do you
obviously,
see?
work at home if you can work at home, and you really should, unless if you're in any of the categories that's the extremely vulnerable. The guidance is you should work at home unless you absolutely can't, and then if you are at risk, you're entitled to be at home. If you can't and you have to go to work in any category, then it's got to be safe, and there needs to be proper PPR and risk assessments undertaken. Any information gathered during the process should be subject to data compliance. There's a whole lot of things that employers didn't used to have to consider in even bringing somebody into the office on a day-to-day basis because of the risk that's involved there. So really a big focus on keeping people at home if they can be kept at home, and then if they are at work, making sure that they're safe. And thereafter, if somebody is asked to come in and they don't think they can come in safely and they raise a concern, then the employers are on notice that there could be a problem with that, or they need to consider whether they suspend them on full pay or put them on furlough. And at the moment, there's been an update really in relation to carers and people with school children. If they think they can't cope, a lot of them are asking their employers to put them on furlough, and they can put them on furlough. But I saw that it was debated in Parliament, I think yesterday or the day before, whether there should be a right to request furlough if you're in a caring position, especially school children, but that was not passed, although there is an ability to put people on furlough if they're in that situation. So there still remains a lot of uncertainty about when and where you can claim furlough and what you can require people to do, and also the position employees have been placed in if they've got competing demands. And I think what we're seeing this time round is a lot more stress and anxiety as well, and people claiming you're just not able to come in because they can't cope, or leaving employment. There's a lot more resignations because it's just become too much. So from an employment perspective, the care imposed by employers is being put under greater scrutiny, just because actually there is an obligation, implied term of trust and confidence, to look after your employees. If they can't cope, what steps can you take in relation to that? And where is your obligation on pay in those circumstances?
Well, I think the TUC have published some information, is it yesterday or today, saying that the majority of parents are actually being denied the furlough for childcare responsibilities. Some are going with it, but others are being told no.
There's definitely a large range. There's a range between people offering 1 or 2 days extra holiday or more than that, or putting them on furlough, or just saying you can have unpaid leave, or saying no, you can't have anything. And
sure.
There is a concern that the people who can't cope and who are leaving are predominantly women, and that's going to ultimately impact on gender pay and that kind of thing within organisations.
Yes. Lou, are you experiencing anything on the shop floor there with regards to furlough since this last lockdown? How are the deadlines working out?
I think the biggest impact really for December was December payrolls ran early, and then with the lockdown rules, then businesses had to quickly within 12 hours make a decision: are we open, are we closed? So then that caused another payroll, or else for adjustments to be made in January. But then of course then you had your deadline that everything had to be submitted by yesterday, for your December payroll, and getting that furlough claim in. And it's the volume and of work involved in a normal December run. Similar to what I said last month, December is a very busy time. We then had the furlough to deal with, and then you had the changes. You then have the ripple effect, because we're no longer the UK in effect. You know what, even with Brexit on the 1st of January, you're already dealing then with 4 nations within the UK and what their specific rules are. You know, and within England, if you look at the number of counties, how that can be split down into different areas and different lockdowns. So businesses are then having to be very agile in how they deal, and that can affect especially the work within the HR teams, the finance and the payroll teams, and what has to be done, what documentation's needed. You know, we're back to whenever we're doing our furlough claims, have we saved everything down that's relevant for that period so that you can refer back to it for that claim that you've made? And I think that's very important. And, you know, moving forward, will it change again? Whenever you look at businesses, they're already having to cope with so much. So, you know, even going back to our rogue employers, at the same time, this is a time where businesses are struggling and they have to look after their employees.
Yes, thank you. That's great. Should we, you mentioned the Brexit word almost, I think there, Lou. Do we have a Brexit slide next, Natalie? Should we go there? Yes, so Brexit done. Any thoughts we want to say? What are your initial thoughts on there? You mentioned, brought us up briefly there, Kirsty, with potentials of discussion from the FT on changes in employment rights. Any other thoughts on Brexit? And you've got your Northern Ireland view as well there, Lou.
I think holidays and working time are an area that, even if what the FT said wasn't true or wasn't a reliable source, everybody is expecting at some point a change perhaps to the 48-hour working week and other, you know, what is included for the purposes of calculating holiday pay. I think discrimination law may be something that's subject to change. There's no cap because of the European legislation. They may try and introduce a cap in line with unfair dismissal or something like that, but it's likely to face quite extensive resistance. TUPE, government might wish to ease the burden on employers in transfer of undertaking situations by, for example, allowing harmonisation of terms and conditions. That's another area that people are pointing to. The UK actually gold plate the provisions in any event in our regulations, so that's probably the only area that would work. And I think agency workers, John, you're the guru on that. There's a suggestion that something there might change, isn't there?
Well, yes, there have been some suggestions that because, well, let's face it, the agency workers regulations, when they were introduced, certainly with employers, were pretty universally unpopular. And there's always been mutterings that at some point following Brexit that they might be removed. However, I think the direction of travel probably suggests otherwise. We had the repeal of the Swedish derogation under the agency workers regulations, which allowed employers not to pay parity to agency workers. So whilst it's possible, I think the general direction of travel is more to enhance protections for agency workers rather than the other way around. So if I had to put money on it, which I'm not going to, I'd say that likely to be enhanced rather than reduced.
Okay. Any pensions implications you're aware of, Andy, as a result of Brexit, do you think?
Well, there's cross-border. You have to. This is more pension schemes than employers, but obviously the pension schemes, cross-border pension schemes, have to be considered. You know, and I guess it's what you're doing with your overseas employees on secondment, etc. Just making sure there's no implications for them. But it's probably more to do with national insurance and stuff, isn't it?
Yeah, sure. I'm still seeing some overseas businesses struggling with setting up pension scheme in the UK because certain businesses won't let you unless you've got a UK bank account.
There are one or two pension providers that will accept overseas employers with no UK bank account.
Yeah.
And
is there a list published anywhere?
No. I mean, it's public domain, so I can. I think depends, but not all of them are open to all employers. They can still say no, That's the thing. Smart is one. Scottish Widows were talking about accepting it. They may still be open. So there are some. So search or contact people, contact us in some way, myself or within the panel, and I'll put you in touch.
No, that's great. Thank you. Sam, any thoughts on Brexit? Yeah, as a general comment from myself, right to work changes don't actually come in until 1st of July in relation to employment. So we're in this sort of grey 6-month period. But Sam, anything else you can think of from Brexit point?
No, I think it's pretty much all been covered. It's it's interestingly, in advance of today's call, I was looking back on the Queen's speech of 2019 and Boris Johnson's introduction to that, about how we as a nation would look post Brexit, and this and I just thought you couldn't have imagined a worse possible year following that Queen's speech than actually became, and particularly for the run up to Brexit, at a time when people needed to have been focusing on changed processes and new dealings for pay and social security. They were actually having to deal with other situations. So no, I think it's more to follow, I think, on this subject.
Okay, thank you. Let's move on to Budget 2021 and the changes that we're all interested in, because we all want to know what the tax rates are, etc. And reality is we've got absolutely no idea. So now this is really busy time of year for software developers. They really want to distribute their software, and the closer we head for April for payroll managers yourselves as well, and HR, with such a late budget, does this present challenges, and what do you know and what is missing? So what we have confirmed is national minimum wage, national living wage. The NIC values have been published and the statutory payments, although a correction to the SSP daily rates was made today because their rounding was wrong. So there is a new table for the daily SSP rates, which come in on the 6th of April. Maternity, paternity, and all those sorts of things change on the Sunday, the 4th of April, for weeks commencing from then. What we're waiting for is income tax. We have some indication of income tax bands, courtesy of the Sun. So, and the Treasury has confirmed their values. So a slight rise in the upper, and the personal allowance is going up by 70 quid. So we do have some information, which they all, including the stuff we already have, say they're subject to change at future fiscal events, which the budget just happens to be, which is the 3rd of March. That's not saying they will change, but they're subject to change, and we still haven't heard from Scotland. So the Scotland statement on their finances for next year isn't until the 28th of Jan. Wales have decided to stick with whatever England and Northern Ireland do. Pensions, Andy, what do we know about pensions for the new year?
Just waiting for DWP to confirm. I would expect that the thresholds will continue to be aligned to the lower earnings limit for the lower threshold and the upper earnings limit for the upper threshold, and no change to the trigger. People get automatically around the £10,000 figure. But don't know for certain. Just got to wait for DWP to confirm it.
So if you think, yeah, just thinking, if people think that their software or payroll service provider is not being very clear or transparent with what the rates are for next year, it's because they absolutely have no idea in reality. Yeah. And we're all, I imagine Sam, Lou, and myself, certainly, I don't know about you, Andy, in your old days when you're with your former as a payroll manager, we all have our crystal ball. Occasionally it's got a few cracks in it though. So Lou, any thoughts on New Year?
Oh my goodness. I'm wary. I mean, the 3rd of March, I'm waiting to that date. It concerns me about the software, to be honest with you, especially we have such strict processes and protocols in place for we have to test the software once we actually receive it. And then there's a delay to when we can actually implement it. And I'm sure I'm not alone in that. It's then sharing that information with our clients. I'm sure you're in a similar position, Simon and Sam, where you're having to give that information. Even today, I had a request, what are your thoughts on this? And all I'm able to do is give an overview, and global clients don't necessarily understand, because globally they sometimes, as a rule, work January to December, so they can't get their head around legislation in the UK being from April. So I'll be interested to see exactly the personal tax element, if there's any changes to the tax bands and how it's going to impact us, and anything else. You know, is furlough going to be extended again? You know, okay, it's up to the 30th of April, but realistically, did we think that we were going to be in this position that we're in now? And will there be that we'll have to continue with the furlough so that we can help businesses support our workers?
Yeah, it's tough. Yeah, SAS, SOX, what's that got to do anything? ISO, don't need those standards, do you? They don't take any time at all. You can release the software tonight, can't you, Lou? I don't know. It's probably the same for yourself, Sam. Well, I think that we're coming to the conclusion of our time today. Hopefully you found that very informative. I think we've tried to tackle all the questions as they came through, that we've seen on screen as they were asked. If not, keep on asking away, and we can either incorporate those into future events or answer them separately. But it's been good to have you with you, and many thanks, Sam, Andy, John, Kirsty and Lou. Really appreciate you joining with us. Our next session is set for Friday the 12th of February. We'll probably have a slight adjustment in some of the panel attendees as we get closer and see if we know anything more, and hopefully the Scots will have decided what they're doing as well. But thanks for your time, and we'll see you next time.
Bye all.
Bye, everyone.
Bye.